Hello traders, this is Joanne with Succeed in Forex. Welcome to our Forex Market News broadcast for Monday, February the 18th, 2008. Today is President's Day, which means that most financial institutions and the stock market are closed today, which made it very light trading. Just because the U.S. is having a holiday does not mean that the rest of the world isn't trading, so let's just see what's going on. The headlines out of Switzerland this morning read, Euro is looking to run back at its record high near 150. The dollar slid against most major currencies on Friday and posted its worst weekly performance against the euro in 2008 to date. This was after the U.S. economic reports renewed fears that the economy continues to drop into a recession. Investors pushed the dollar down against the euro for the fifth day in the last 6, pushing the Eurozone currency above 147. To the first time since February the 5th, after a gauge of U.S. consumer sentiment plunged to a 16-year low in February. The euro-dollar last traded at 146.82, up 27%, after climbing as high as 147.09. It's currently trading around 147.52. Just a reminder that the prices that I quote on the pairs come out of Switzerland earlier in the morning. I also try to give you a current price on my charts as I'm recording the video, but with a time lapse between the time I record and the time you possibly view it, you really need to check your charts for current prices. The dollar-yen was unchanged to 107.82 after the New York Federal Reserve says its New York State February Manufacturing Index posted the biggest monthly decline on record. Friday's batch of weak data comes a day after Fed Chairman Ben Bernanke warned of continued sluggish growth in the near term and said the central bank will act as needed to provide insurance against downside risk. As a result, the euro may be set for a run at its record high just shy of 150. Particularly with the Federal Reserve seen cutting interest rates further below the European Central Bank's interest rates. Since mid-September, the Fed has cut its benchmark rate by 225 basis points to 3%. Bernanke's remarks and recent economic data have left investors betting on another 50 basis point cut at the central bank's March meeting. Expectations for the ECB to follow with rate cuts of its own have faded, with the ECB officials stressing that inflation is a bigger concern than growth. That has continued to move the rate spread in favor of the euro, reducing the appeal of holding the dollar over Eurozone debt. The dollar Swissy fell 36% to 109.33. The pound dollar was the only major cross to weaken, falling 41% to 196.13, with dealers citing technical factors for the pullback. Some analysts are worried that inflation may not be only a European phenomenon. The University of Michigan Consumer Sentiment Index showed one-year inflation expectations soar to their highest since August of 2006. Separate data on Friday showed the U.S. imports prices rose by more than economists had expected in January, mainly the result of high food and energy costs. During the Asian session, the dollar remained steady as the yen battled declining confidence. The dollar was steady against the yen and the euro as investors remained on their toes, focused on a series of economic data to be released this week. And this should give some indication on the state of the U.S. economy. Even as the dollar is viewed as undervalued, many analysts are still viewing a recovery of the greenback as a totally different scenario. The lackluster performance of the U.S. economy and the meager confidence investors have in its future has contributed much to keep the dollar in the doldrums. The dollar still has another test to pass, a test against the euro. This will come on Wednesday as the January U.S. housing starts and consumer price index are released. But the euro might also suffer a tumble as data out of Europe could lead investors to expect a ECB rate cut, which could ground the euro current appreciation. Investors are still weighing the probability of a rate cut in Europe, even as the ECB officials consider this as unlikely. However, against the yen, the dollar still has the upper hand. The yen, for its part, still is affected by negative economic sentiment. The governor of the Bank of Japan, Toshihiko Fukui, admitted that the pace of the country's recovery is softening. The turmoil gripping the Japanese economy has forced the Bank of Japan to keep its rates steady. If normal conditions return in Japan before the end of March, this monetary flow could easily correct the upswing of the dollar. During the European session, the U.S. celebration of President's Day saw little change in the dollar. The markets were quiet on this Monday as U.S. markets remain closed for President's Day. Traders and analysts alike are still bracing themselves for some news announcements later this week. On Wednesday, the Labor Department releases the consumer prices, which many expect to show a rise of 3%. Also on Wednesday, the Fed will release its minutes for its January 29th and 30th meeting. We should know the day before how the Fed is reacting to the current state of the economy, with Fed President Gary Stern's speech on the economy to be delivered in Golden Valley, Minnesota. The dollar strength can also stem from news released in Europe that could affect the euro negatively. The accepted view is that we won't see a policy change from the ECB towards a rate cut. The dollar is most likely to remain little changed until elements appear less hazy. That concludes our news for today. We hope you have a great trading day and make lots of pips, and will be able to join us tomorrow for our newscast. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you can find a link to our Yahoo forum, which is also called Succeed in Forex. And you will find additional information about our Traders Training Center. We look forward to seeing you tomorrow for our next Forex Market News broadcast.